Hi viewers. So after a gap, actually I came up with the updated version of the ALGO, and what I noticed in the previous version, previous method of trading, so there have been lot of orders being punched where we are unnecessarily paying for the broker and even to the in the form of taxes. We can't, all people say that we are paying brokerage. Literally that is it's a wrong view. Why? Because suppose you have paid 100 rupees in the form of brokerage and taxes, 70 rupees is going to the government in the form of taxes, only 30 rupees is going to the broker. So better we don't call it as a brokerage, let's call it as a tax we pay, okay, for the transactions we do. So now here today we see that is, you can see here total profit booked for today, it is 48,825, and the total number of closed trades. Okay, of course we are not having open position now, and today this number of closed trades is 43. And I should tell you that we have done all these trades with 250 quantity in Bank Nifty options, 250 in the sense 10 lots. Okay, and we can see the number of trades, each trade, how many it has taken. But in our broker terminal it will show all the cumulative, it will not show the individual profit per order. But in paper trade, here we are having opportunity to see everything in each and single trade. We can analyze what's happening with our strategy. Okay, so this is the complete details about the strategy. Of course I would explain, and what and how it works, first let me explain. Actually, so in a month we almost get around 20 to 21 or so trading days we get. Okay, so out of 20 trading days, there are likely to be almost 3 trading days where the market would move in a directionally single direction, like continuous uptrend or continuous downtrend we might see. Okay, this is the first thing, and our strategy will work when the market is in a volatile or range bound condition, like this, move up or down or slowly. Sudden spikes, sudden movements, hundreds of points movements will incur losses in our strategy, and we should be ready to forego for this. Right now we have reduced our entries also, conditions for the entries have been changed. Okay, so we are using it in 30 seconds time frame. You should imagine that is how much moments we can capture in 30 seconds. So this is one more. Now so it is completely based on price action theory. Okay, and how it works. So all from what I have noticed is, right from around 9:40 we will begin. Why? Because for our strategy we don't need the big moves in the market. So 9:15 to 9:40 likely to be one-sided huge movements, and also after 2 o'clock also. After 2 o'clock also, 2 p.m. and we find big moves in the market. So in order to be positive, our trades must be in between this time. This is the ideal time for our strategy to work. So this is the best time. So now today, and I have stopped the algo at around 2 p.m. After closing the 2 p.m. trade, we have stopped. Okay, now I'll show you the timing also. See, the first trade it has taken at, you can see here, it is 9:48:33 seconds. So we will usually find 33 and 03 seconds like this. Why? Because we are trading in 30 seconds time frame, right? And also now, so first order took place at 9:48:33 seconds, and you can see all these. Okay, each trade, most of them has ended in profit. Okay, you see here 1300, 3150, 512, and you see 6700. And if you notice all these, you see the strike prices. Of course, we give ATM strike prices based on the premium available. If it is less than 250 or so, we'll shift our these option strike prices to next, like minus 100. Okay, minus 100 points for the call options, plus 100 points for the put options, right? You see, most of the time it has traded in 40,600 call option and put options only. And I'll move the screen up. You see, so most of throughout the day it has traded in, you see, that 40,600 call option, and last trade it has taken a profit of 3,150. Next 2,150, again next 212. Okay, based on the price movement we will close our, I don't do that, our algo will perform. And you see, I'll be executing these orders from trading view. Okay, you see, so usually this is the trading view orders chart. It takes alerts from here and we execute the orders, right? So now if you observe here, after 2 o'clock we see sudden spike in the big spike moment in the market. We don't want this because these are likely to incur losses to us, right? So we avoid these timings as well. We avoid morning 30 minutes or so also, we avoid it. Okay, that's how we punch orders. And right now I am showing this in, and this is not the indicator, I am just to watch it I have put. We are not using indicator, we are using price action theory, right? Now, so this paper trade today, only 2 times we have traded 40,700 strike price. You see this one, let me round it up. You see here 40,700 put option only once in this page. And let us move to the next page. Let us observe, scroll down. Yes, one more time also it has traded 40,700 put option here, 40,700 call option here. Only 2 times it has traded in the next next strike price. Remaining all, it has traded completely in 40,600 call option and put option, call option and put option, because it is very range bound movement today. So this will be a good advantage. Now, so as we see, most of the cases 80% of the trading days will be in range bound only. Only 20% of the trading days we are likely to see one side movement in the market. So those days, if we identify, or by incurring losses only we can identify, because we don't know which day is going to be a trendy, right? Now, so usually let us assume 1 day's profit we can forego. Okay, now this strategy I will continuously run for this week until Friday, and let us analyze. Okay, let us not risk our real money, and let us wait and see the results, how it's performing, and then let's connect our accounts to this. So this will be a better idea. So why? Because Friday market conditions are different, Monday, Tuesday it's different, Thursday and Friday, Wednesday and Thursday, okay, we see huge premium decay. So that also, all these different circumstances and different type of moments in the market we identify, and let us test how our strategy is working. So 1 day success, we can't say it is a huge success, and also 1 day loss also, it's not a, we can't decide it is the strategy is not working. So most probably no strategy will work all the time. There will be some days where that strategy will not work out. Okay, so this is the performance. Now let us calculate the taxes we pay for this. So we see 43 trades, right? Let us calculate 43 trades, 43 times it has bought and sold, right? Now let us multiply this with the quantity 250. So we are losing 10,750 approximately for this, right? So, and if we minus 10,750 from the profit you see here, okay, so 48,825 minus 10,750, and this would be the net profit on the investment. Now you will have a question, how much is the investment? Okay, now investment is, as I said in the earlier video also, it will use in between 1 lakh, below 1 lakh most probably. On Fridays only sometimes it will use more than 1 lakh, 1 lakh 5 or 1 lakh 10,000 sometimes, because the premiums would be high on those days. Even that day we try to reduce select the option which is trading near 300 rupees. Okay, and this will be the investment, but at least 20 to 30,000 rupees we need to have a buffer amount for this, and let us assume we can take this to be around 120 or 130. Okay, 1,30,000 shall be the 130k shall be the required capital for this. Now what is the minimum capital required here? Okay, so the minimum capital required, I would say at least 50k. So why 50k? We can give here 4 lots, right? Why 4 lots is a reasonable quantity to trade? Because suppose you trade with 1 lot, so we have 25 quantity for one lot, right? So if you buy and close, suppose you see here some trades for 250 quantity only, you will see like 200 only profit, okay, 1000 profit, which means it is capturing 5 points, 7 points, 2 points, sometimes 1 point also. Now what happens if you trade with 25 quantity, that is one lot. So we pay 20 rupees for buying as a brokerage plus 20 rupees for selling it. That means 40 rupees we are paying for this, okay, and another 40 will be for paid as in the form of taxes, right? Now if you do this, you need to, in one trade at least you need to book 80 rupees, which will come at least more than 3 rupees. So without having 3.5 points as your profit taking, you can't see profit in your account, okay? So that is the case. Now that is the reason why if you take 4 lots also, you will pay brokerage 40 only plus 120 as a taxes, let us assume, okay. I don't think so, we will pay 60 to 70 rupees, 60 rupees, yes. So 40 plus 60 will be your payment for the taxes, right? That means almost 1 rupee, our break even price for every trade will be around 1 rupee to 1.5 paisa, 1.05 paisa, like that. If it comes to Thursdays, I mean day by day it will reduce, or break even point or break even price will be reducing from compared to Friday to Thursday, every day it will reduce, okay. So this is the process happening in the market. So that is the reason why I suggest ideal number will be at least 4 lots, right? So let me refresh again and you check out, this is the profit, and I feel this will work, but I don't come to conclusion that we can connect our accounts directly right now. Let us wait for these 5 days, okay. Already day 1 is completed, another 4 days we will wait and see what would be the result, okay. Thank you.